for smiling. Singapore, synonymous with shopping. You ever been there? It's one big, huge, five-star shopping mall. But recession has taken its toll and figures out imminently here, about an hour, hour and a half, are likely to show another slump, biggest one in like a decade. So Haslinda decided to go out and give a helping hand to the beleaguered retail space. And look at her. Look at her, the poster child for the luxury retail space. Haslinda.
Hey, you know, Burns, I don't know if I'm really the authority for shopping, but I've done my fair share for sure. And just walking down Orchard Road in Singapore, lots been done to boost the shopping experience for shoppers. All kinds of facelift for malls, new ones being built, all that adding to an unprecedented supply of, you guessed it, retail space. Come, let me show you what I found out. It sits at the busiest junction of Singapore's famous Orchard Road. A blanket of stars lights up the Ion Mega Mall at night, but bright as it may be, all that glitters may not be gold. The reality of recession and Orchard Road's makeover is squeezing developers.
The Ion at Orchard Turn, Orchard Central by Far East, there's 313 at Somerset by Land Lease, and OCBC has the former Phoenix Hotel that will be redeveloped as well. So all in all, quite a bit of supply that's coming on stream. So just purely from the dynamics point of view, supply-demand balance, I think we'll see some pressure.
The locals are spending less and tourist numbers are down, although you wouldn't think so looking at the crowds, but they're mainly here for the discounts.
Yes, there is a lot of shopping going on, but everything is driven by promotions, really. In every respect, from the car business to property business, restaurants, consumers are getting great deals. There is money to be spent, but they are looking for deals.
At stake is $35 billion of retail receipts. That's 14% of GDP. Rents have dropped for 3 straight quarters, and retail REITs are feeling the pinch. Some analysts have turned cautious. Nomura says to avoid the real estate trust, although Singapore's biggest mall operator takes the slowdown in its stride.
During good time or bad time, we must always think of ways to actually help our tenants to generate sales. I think even in a good time, we actually got to help them to actually compete with other retailers. So I think it's not whether when it's coming out, when it's going down. It's a question of at each point, how do we value add to our retailers to help them do their business? That's more important.
Capital Mall expects renewal rents to rise 2% this year, and all that extra shopping space may not be a bad thing.
With this new supply that's come on stream, plus the Marina Bay Sands retail space, which is also quite substantial, I think we do expect to see new retail concepts, new retail offerings, which will broaden the appeal of Orchard Road, to make it a little bit more exciting, a little bit more like what you see in Paris or in New York or in Ginza in Japan.
But that's expensive appeal, and for now, as Singapore goes through its deepest recession in history, consumers may rather gaze at the stars than part with their money. Well, Burns, that Ion Mall that you saw just a while ago, I mean, super trendy, super huge, and super futuristic. Not sure our kind of thing, buddy. It's 2 now, 2 for the moment. And by the way, those retail figures due at 1 p.m. Singapore time.
Oh, too hip. I was thinking, Mark and I were sitting here going, what's that? I haven't been there in a while. Is that the Durian? Did she put the Esplanade, the theaters by the bay in there? And instead, that's pretty cool, Star Trek looking. I used to go to Wisma for my nasi lemak, and that's still there. So I'm kind of glad to see that still hanging around. And I also noticed that you have an outfit.
It's still there.
It's still there?
No, I was going to say it's still there, but it doesn't look the same.
Yeah, no, it's updated. I mean, when I was there, it was painted on the logo. I was going to say also, you have a wardrobe that looks like eerily like every shop backdrop, which we took a look at in that story there. Excellent stuff. I'm sure that was a very hard assignment, Mark, for us.
Difficult, yeah. A bit of research required, I think, before you start.
A lot of very intense econometrics there.
I thought it interesting, talking about price, discounting. That's consistent with the overall theme in the region, this deflationary trend that we're seeing across the region.
What deflationary trend? People are going nuts again. I actually saw somebody order a bottle of Latour the other day in a restaurant when I was ordering a $300 Wolf Blast.
Not talking in that particular segment, but more generally, prices coming down. We've seen a lot of liquidity run through to asset prices. But historically, that has ultimately led to inflation, but no indication this time around.
Okay.
Hey, Mark, I have a question here for you. I mean, people are spending much less yet. We saw from the 2Q numbers that Singapore's economy is showing signs of, well, maybe some kind of recovery. I mean, how do you justify, how do you reconcile the two?
Well, certainly the economy is recovering on access to global markets, really. The domestic economy, as I was just commenting to Bernie a little bit, is that consistent with what we're seeing elsewhere in the region. We haven't really seen that big kicker come in on the back of these portfolio flows that have run through to asset markets, to stock markets in particular. So I think it's an improvement definitely off the bottom. Singapore, very open economy, totally exposed to global trends, and I think that's what we're seeing. This restocking that we saw through the second quarter in particular has had a big impact on Singapore, and as we know, particularly in the pharmaceutical sector, I think for Singapore we saw restocking in the pharmaceutical sector, and that's had a big impact overall in Singapore.
And just to take into account more of the macro themes that we're discussing here and that are kind of running through the system right now, you said basically the essence of the tone is a sort of a pullback or a recoiling in terms of conspicuous consumption.
Yes.
But being a value seeker, looking for defensive stocks, looking for recession things, that was in vogue in the first quarter.
Not now, no. I think utilities have underperformed in the region. Certain energy stocks are underperformed.
Yeah.
Defensive generally underperformed. But we've come through this period where we have seen tremendous liquidity flow through to the markets, and the expectation has been that those companies that had underperformed the most would now start to recover first. More recently, we've seen the banks possibly on the back of the Goldman results, but definitely consistent with that theme.
To what degree would you buy the total discretionary purchases, like the Tiffany's of the world or the Lane Crawfords? Well, things you don't need but you aspire to.
I think that the high-end brands are going to come under a lot of pressure now in the new environment. Okay. I mean, maintaining the margins when people are looking for bargains. Generally, I think there's going to be some serious thinking going on in overall marketing strategy in this part of the world. And
when a lot of these luxury brands, which used to take pride in never discounting to keep the image up or cutting 70% off, they know that hell is breaking loose there. Okay.